Welcome back to the Penny Lane podcast. This episode is the second part to Richard Miller's interview. He discusses using decades of historical market data in order to find key levels and make high probability trades. There are a few minutes of the previous episode provided for context. A big thanks to our sponsor, Rhoback Clothing. Don't forget to like, subscribe, and leave a review if you enjoyed today's episode.
Then we had the financial crisis in 2008. And of course, after that, HFTs really dominated the market. So everything I had done, like shorter term trading, speculation trading for a tick, was gone. And I struggled. And I said, I think I need to be more quantitative about what I'm doing. So I called up a friend of mine who had, when I was in the options group, and Dave and I had remained friends for, he still lives in Illinois, but we've just remained friends. We've been friends for since 1990. So I'm do the math, over 30 years. And I called Dave and I said, Dave, I got this great idea. I want to do this quantitative studies and do this. And, I was thinking Dave will help me. He goes, Rich, that's a great idea. It will probably be, it'll be really beneficial. I'm sure you got a lot of great insights, but you're going to have to learn to do it yourself. You can't hire it done. I said, what do you mean? He goes, well, I don't have time to do it. And if you hire some programmer to program what you think, he's going to come back in, a couple of weeks with an $8,000 or $10,000 bill. And you're going to say, but that's not what I asked for. And he said, you got to learn to do it yourself. And Dave is one of those Microsoft 5-star experts, whatever they call them. He goes, just learn to do Excel. You know a little bit of it now. I know. And I said, yeah. And he said, it'll take you a while, but just learn it. And you can do what you want to do. You'll find your own answers. And he was right. Because of the internet, I was able, I found a place where I took some courses and course material, and I novice, intermediate, expert, and so now I program in Excel and VBA, and I think in the last 4.5 years I've programmed over 11,000 hours.
Amazing.
So, and I say the first 2,500 hours of that I was just learning to do things. And the rest of it is, I have databases on every, all the indices and the VIX futures. And I just keep building more and more sophisticated programs. I'll show you some of the results of some of my work. And there's nothing I can't do. Sometimes it takes me a little while to figure out how to do things, but there's nothing I can't do in Excel and VBA, given the time. And I've actually learned a lot of things doing this quantitative stuff that I would have never discovered had I not done it. And I'm unlocking things about opening gaps, about range trades during the middle of the day. And I have stats on all kinds of stuff. That's how I got started into electronic trading. That was the whole transition, and now into the quantitative stuff. And the quantitative stuff is kind of morphing in, because then I had somebody say, well, if you're doing this for yourself, there's a lot of people that'd be interested in this, Rich. You should, start a website. Well, that whole thing has been like another learning lesson, about trying to sell information and sell data and sell what you know. And I learn every day, more what people want to learn, and what I have to offer. And because I have a lot of experience in a lot of areas, options trading, markets. I've been a technician for, all my life. So I've tried lots of different trading systems, and, have a lot of insight into a lot of things. And I'm able to program my insight into the market, into my databases, ask the questions about how I think about things. And I get some pretty amazing answers. I have some really good insight, I think.
Rich, would you be willing to come back and do a second part to this interview? Because I really need at least another hour to go into what you're doing now because it's so incredibly fascinating. But I really, really wanted your backstory, which has just been, I wanted all of that information. This has been such an amazing interview.
Well, good. I'm glad it's been an amazing interview. If you want to be done, I would like to leave you with one thing. I souped up one thing. I have so much stuff I could show you. I will just show you like one of the things I do for what this is, and I do this on a regular basis. This is actually the program. I have monthly statistics that I put out for my followers. I have so many statistics on so many things that I put out for my followers. I do short-term studies sometimes, but I'm just going to grab this real quick. This is just monthly statistics. This is for December that's coming up. And since 1970, there's been 39 Decembers that were up and 13 that were down. So 75% of the time, December's an up month. The largest point gain was in 2021. It was 4.36%. The largest gain as a percentage was in 1991. It was up 11.16% or 41 points. Largest loss by percent, 2018, and by points and by percent was 2018. And then the average gain in up years is 2.93%. Average loss is 2.60. And since 1970, there's been 1,083 up points, 404 down points, for a net of 678 points gained in December since 1970. And the average gain in December is 1.1%, which is one of the best months of the year. This change. I download my data in a certain way. This here should be a little different. But this is from 2008, because I like to look at from 2008, and you see there's 11 up and 3 down since 2008. And then here's of these total points gained since 1970, more than half of them were gained since 2008. And then looking at January, because I have statistics on what the prior month did, what the following month did. I have the ranges for the months. I have open and closes. I carry a lot of different data and, analyze it in different ways and apply it in different ways. But I think this is important to see that even though December is one of the better months of the year to trade in, actually it's the most gains of all months come in the fourth quarter and come in December in particular. But following in January, since 1970, January, was up 58% of the time. And since 2008, now it's only up 40% of the time. So you can see if you look at prior to 2008, January was up 65% of the time. Post 2008, it's only up 40% of the time. So Januaries are getting to be worse performers, and I actually have quarterly data that enhances that. I have I have a lot of studies on all this stuff. I'll jump into this one real quick, and then I'll let you go. This is a study looking at quarterly data, and how many quarters were up, how many points were made per quarter. This is looking at the first quarter, second quarter, third quarter. I break it down by years. I have consecutive quarters in a row. This is one of the reasons why, too, earlier this year, as early as July, I said that the fourth quarter would be up this year. And that's because if you look at this, here's consecutive quarters down since 1970. The most consecutive quarters we've ever had down was 6 in a row, and that was the financial crisis. It was down the last quarter of 2007, and it was down the first quarter of 2009, and every quarter in 2008 was down. And 2008 is the only year since 1970 where all 4 quarters of the year were down. So we were down the first 3 quarters of this year, and I'm going like, if you're down the first 3 quarters, what's the probability of being down the fourth quarter? Not very high. It's only happened once. It was the financial crisis. This is not a financial crisis we're in now. That's why I said this quarter, the fourth quarter would probably be up. And you can see we've had 4 quarters in a row down only 3 times since 1970, but they span 2 years at least. And then I have all kinds of data on up quarters, and this is the data since 2008. and I look at all kinds of things like that to kind of give me a feel for what's going to happen. And that's one of the reasons I've been so bullish this fourth quarter. And I believe we're going higher. I'm actually going to do a study this week. I started on it a little bit this morning to find out what the best day of December is. I have a database here that this has over. I'll show you this. I'm just looking at all the December days now, but this database here has over 9,000 days of data in it, and I'm going through it now to look and see when the best day, and I actually cover every single day of the month. So, the up days and the down days, by day over all those periods of time. And I know how many days, how often the high was made on, what calendar day of the month. And then I can go back and look at the data, and, I can look at it by day of the week, so I'm working on a little study there that's going to be kind of fun for Christmas. And that's just a little bit of what I do. I break this stuff down even more, but anyway.
Bo.
Blaine.
We're hat twins.
Yeah, we are.
Yeah, we are. I'm so excited that we're sponsored by Rhoback now. I have been wearing my gear ever since it came in the mail, and I love the colors, but I especially love this little dog. I wore him to the pool last night, and people were giving me the thumbs up.
Yeah, this stuff is awesome. I had heard about it before and always wanted some, but now that I have it, it has exceeded all of my expectations.
Is this your first time receiving a gift in the mail from a company and opening it and checking out the product?
It might be. It certainly is associated with the podcast.
I have gotten those before, and I was blown away by the quality of this product. It far exceeded what I thought that it would be, and I truly think I'm just gonna live in it all fall.
Yeah.
It's so comfortable.
Yeah, I've been playing golf a lot this summer, and so I like all my golf gear, but the thing about golf shirts is the sleeves are always too long and they're always too baggy, and I'm relatively in shape guy, so this fits me perfectly. I still have full range of my arms to swing a golf club, and I could wear this doing anything, not just golf. They got hoodies, they got quarter zips, it's nice and stretchy. I love every single thing I got.
Me too. I love it. It all looks so good together. It's part of a set, and I feel so thrilled to be able to offer our listeners a 20% off code, which is
Penny20.
All right. So you go to rhoback.com, which is RHOBACK.com. And you just enter Penny20, you get 20% off, and thank us when your order arrives because it's lovely. You also know how much I love opening experience. I'm such a snob about packaging and the way things are presented, and it was a treat.
Yeah, the shit's awesome. I'm not
Yeah.
Don't even have to I would just promote this to anybody regardless of a sponsor or whatever, because this shit slaps.
Also, you've already been low-key pumping out the Penny20 to your closest friends because you really believe in it.
No, absolutely. I'm sending this to all my friends because it's shit I think that they're going to want anyways. So, why not take advantage of the discount and rep it everywhere?
Totally. Thank you, Rhoback. We appreciate you.
If you want to see more of that kind of stuff and more of what I'm doing, and that's just some of the studies I do. The main thing that I want to impress upon people, though, is that I use standard deviation levels that I derive from the options pricing model, and the enhancement that it can give to people's trading is, I think you can't trade without it, without knowing it, and
it's unbelievable. It's unbelievable everything that you share and have figured out. Just incredible.
Well, I also, I've got a gap study that I'm probably going to release. I was hopefully within the next 2 or 3 weeks, and I cover gaps by day of the week, by month of the year, by year, by size, percentage. I have other factors that I put into it, and it's all programmed. I have a gap program that I run every morning. I hope, I don't know if you've come into my room and seen me run that program in the morning.
I haven't been in early enough yet, but I will be there.
I have a gap program for the NASDAQ and the S&Ps, that each program has about 3 million bits of data, and I look at all kinds of things. I have like 140 factors in each one that I look at to say whether the gaps are going to be filled or not. And gaps have actually been filled a little more this year, quite a bit more this year than they normally have. I have a database of 15 years that I look at for that. And I've gone back like 30 years, but the actual stats haven't changed that much, here or there. And I look at so many things and I'm breaking things down and I'm looking at things that, a lot of the stuff that I look at, I won't disclose how I look at things, but I look at, the way things open and close, the way they trade, prior days compared to future days, and, time of day. There's so many different things I look at. My biggest program, my biggest database I just built has like 6 million bits of data in it. And that's just raw data. And once I start building it, it'll probably have 15 or 20 million by the time I'm finished doing it. And I'm going to be able to do some pretty incredible things with it. It took me a while to figure out how to, write the program, but a long while. And I have a VIX database that I haven't even barely scratched the surface on, and I'm already planning, ways to enhance that. And that is very exciting because I've actually found some things with the VIX when it changes over from trading in backwardation and contango moves, that I can spot some of those intraday and actually pinpoint some pretty major market moves. So but all this stuff, it takes months to do this. I mean, it's taken me 4.5 years to get to this point. And I do so many things now that to get to where I want to be, I think it would take me 3 solid months of just programming and doing nothing else but programming. But at the rate that I'm doing everything that I'm doing, like building the website, trying to, teach people, building these learning PowerPoints, it's going to take a little longer. I mean, I got a lifetime of work to do, but I like doing it. I really do like doing this stuff, and it really does make a difference. I mean, as I said, because of the work and the studies that I did, and I didn't even show you, but just a couple of them, I was fairly, not even fairly convinced. I was more than overly convinced that the final quarter of this year would be an up quarter, and I still maintain that we will end up higher than where we are today. So
it's just amazing. Now, have you told everyone where to find you?
No, I haven't. I guess I could show that real quickly if you'll allow me to. That would be wonderful.
Sure.
This is my website, and if anybody that subscribes, I just, let me go here. I have a free section, so anybody can sign up to this free section. And if you look in here, I have a couple little things, the inspiration for the name, what comes with the subscription. And then I haven't put out Mondays yet, but, and I'm changing a few things, but I put out a free pivot sheet. It's got you can download it. It's just prior day's range. It's got some pivot numbers and some cash numbers for you to keep track of. But it's basically the same pivot sheet. I've had one of these pivot sheets. I call it a pivot sheet. That I've actually printed out for myself for like 20 years. And the one that I use for myself or for everybody else is the same thing, except it's got the standard deviation levels on it. So if you subscribe, I have these guides to these sheets, and then some more guides here, and then these daily files. This is Monday. These are all the sheets I put out: intraday range sheets, pro pivot sheet, strikes in play, which is a whole different thing, and then I put out these standard deviation models for some ETFs and futures. And I'll just quickly show you like this ETF guide. It basically it tells you what the standard deviation levels are, and you know that 3 standard deviations in a normal distribution encompasses 99.7% of all outcomes. 68% is within 1 standard deviation. So you can look at a settlement price and say 68% of the time it's going to be up here or down here, according to whatever implied volatilities you're using. I know I'm going real fast here, but I'm just trying to kick that out. The other thing that I have, and then I'll be done showing you, for anybody who takes the service, I also have, I call it the pro webinar section. I have some like guides to some of the ETFs. I have all these videos. I put out a weekly Outlook video once a week, which will be out this afternoon. And then I have all these videos on studies that I've done, like basic gap stats and quarters that ended down moves. June stats, stuff on volatility, stats on up and down days, and all these videos on options. And anybody who signs up, you can go in there and watch them. And then there's downloads with most of these. There's downloads like even this. I'll look at this gap studies by days, gap stats by days of the week, and you can go in here and watch the video, which it's an hour video, and then you can actually download the stats. And now I've updated all these stats, and there's a lot of stats. I mean, so you think that when you look at these in conjunction with watching the video, you can see that, some days, like here, you can see that down gap stats on Wednesdays fill 68% of the time, where up gap stats only fill 58% of the time. And on Mondays, down gaps fill only 52% of the time. So it makes a difference the day of the week, whether something fills or not. And then my newest studies I have other factors that I include in the stats. So I actually have trades figured out based on what happens, have an 85% probability of filling. I mean, and if you can find trades that are like 68, 70% of filling, you want to take those trades. And obviously, if you have trades that are like, 48%, you want to avoid them. And I have from my studies, I have rules of thumb about what trades, if you don't look at another stat, what kind of trades you don't want to take, or what kind of trades have a higher probability of filling. Just like, like looking at this, a down gap on a Wednesday, hey, that's going to fill. It's probably going to fill. And I have other factors that I can throw in there that, make it even more enhanced. So anyway, that's what these videos, I have range stats, I have gap stats, I have, just a lot of stuff there. And anybody who joins the service can watch all those videos and take all these downloads. And I'm always adding and updating stuff. And then I have a room that, I go over the, what I'm looking at on the charts, and I teach people how I chart. I actually invented I call it my 1440 system of charting. I look at time fractals, and I explain what the importance of time fractals is, and then how to chart those time fractals. It's easy to do, but they're incredibly powerful and incredibly accurate. To keep you from getting in and out of trouble trading. And if you, let's see here, let me close a couple of these. I can show you this chart, and then you may want to go. Do you see this chart here?
Yes.
This like I have a note. Note on this level means that if we trade below this level, we may be going back down. But as long as we're above this, and everybody can, one of my favorite sayings is write it on the wall, because if as long as we're above this 38.6688, we're going higher. And I use color coded bars to tell me, and these are the standard deviation levels for Monday. And then I actually have weekly standard deviation levels that I put on the chart so next week there's a 95.5% probability that the low will not exceed 37.67 and the high won't exceed 41.72. So, and this is very accurate. Well, it's the normal distribution and it works. And then I have all these other levels, and I can make, pretty good calls about what's going to happen based on whether it goes through certain color coded bars. And I teach all that stuff. But just to tell you, my target right now could be as high as 43.63 to the, for the end of the year.
Amazing.
So,
amazing.
So I gave you another goodie there, but I've been I'll tell everybody. I think, not that it's going there. I mean, it could end up going back down. I just keep working at it, and as I say, is that number I said to write on the wall. As long as we don't go below that, we're going up, and I have other reasons for thinking about that, but my studies say that the seasonality, December is the best month of the year typically. There's only been one other year, and that was 2008 in the last 52 years where we've been down 4 quarters in a row. So this is going to be an up quarter. Of course, the bar was not that high because it ended on the low last quarter. So it will be an up quarter. It's just a matter of how high it will, get to. And I think 4,300, and I can't remember what NASDAQ. I'd have to look at what my number is, but it's up there someplace. And but we'll see. I mean, I may be totally wrong, but that's what I'm looking at now. We won't make new highs on the year, but overall, longer term, I'm very bullish. I'm talking the next 25, 30, 40 years. If you're a young person today, like you and I are actually perfect examples of what's going on in the world. First of all, I have subscribers from all over the world enabled by the internet. I was able to train myself because of the internet. I'm able to talk to somebody like you because of the internet. You have a business because of the internet. You talk to people, I'm sure, all around the world. And we can live where we want to live. We can work with and collaborate with who we want to collaborate, no matter what country they're from, no matter what race they are, no matter what religion they are. And people, younger people like yourself are going to see amazing things happen, and wealth will be transferred around the world because people will be working. There's smart people everywhere, and they all want to work, and we can educate people inexpensively. We can connect people inexpensively. We can disseminate information and prices so people know what markets are in other parts of the world, all because of the internet. And you have big companies that are building the infrastructure, to do that. And there's 7.5 billion people in the world. 5 billion of them are poor. They're going to be more educated. And as they're more educated, they're going to earn more and they're going to produce more. So there's a tremendous opportunity for growth in the world. I mean, 2/3 of the world is going to, they're going to get more educated. They're going to contribute more. They're going to be more than subsistence farmers or fishermen or whatever, more than subsistence living. And because of the internet and what the infrastructure that's getting built, people are going to get educated. They're going to live better. They're going to be healthier. They're going to eat better. They're going to have more interaction with other people around the world. And it like us, it doesn't matter where you live. as long as you're contributing and doing something valuable, you're going to be more productive, and you're going to live better. I'm so excited for the future. I really am. And when people get caught up in what's going on short term, short term we're going to have little hiccups, but longer term, because of this technology, things are going to get better for people all over the world. Just, we're going to, I'm so excited. I won't be here to see the change that's going to happen in 50 years, but I can't imagine what it's going to be like. Well, I can. It's going to be good. And, people worry about invasions of privacy. Yeah, you're going to have some of those issues along the way. There's, get over it. It is what it is. Just look at the advantages of it. Living better quality life, healthier life. It's all good, and it's going to happen for 5 billion poor people on the planet, and that's a good thing.
Absolutely.
So when you look at these big companies, people say, "Oh, Apple, how can it get any bigger?" Google, how can it get any bigger? I mean, when you say there's 5 billion people, my brother's trying to call me now. When I say there's 5 billion people that want to live better, they're going to contribute, and the economy of the world is going to grow. It's going to grow in ways that we can't fathom. And
For sure.
you can't, when you look at it with those numbers, you can't help but be bullish, I think.
For sure. I agree with you.
So, so good, bad, and the ugly. That's the reality of the situation. And all these big companies, regardless of what country they're from, they have thousands of employees working to produce. And it's going to happen. It's going to happen. And you and I couldn't be better examples of what's going on. And I'm sure you have people from all over the world that follow you.
I think so. I do think so. And I am just an artist from Atlanta who's been trading for 2 years and doesn't know very much about anything. So if that can happen for me, what an opportunity really for anybody. And here I am sitting and talking with you, like all this opportunity that I've been able to create for myself via the internet and these connections. It's honestly been life-changing. So, and it's just, can anyone with, I think, with enough willpower can maybe make it happen.
I think it's not willpower. It's really work ethic. I mean, you work hard. I mean, I work really hard. I put in a lot of 15 and 16-hour days, and I've done a lot of 7 days a week kind of stuff. Doing what I'm doing, and I know you do too. I just kind of known you now, gotten to know you a little bit over just a few weeks, and I'm going like, wow, there's somebody that works pretty hard. I do work very, very hard, and I have a lot of reasons to work hard. Well, we all do, and I'm a late bloomer, so I mean, I've always worked hard, but since I started this programming and this other stuff, I actually really enjoy it. I really enjoy doing it. I enjoy what I'm finding out, and figuring the programming itself fits my temperament. Just to figure out how to do it, and then as I say, I'm finding out things that are really good, and I can't wait to see where I am 12 months from now, because I look at stuff that I programmed a year ago or a year and a half ago, and I'm going like, wow, that was good, but now it's like so much better. And totally, now I have so many databases. One of the hardest things about programming is building the proper database, and I've pretty much got rules down for making sure things are right, and that insight alone is really, really important, because if you don't know what data you're looking at and why different data sets are different, you're not going to get the same results. And I think my results are really good because I've been around long enough to know certain things changed at certain times. I actually saw a study that a guy that I really respect did a while back, just a couple weeks ago, and I'm going like, wait a minute. And he did a study, and he was referencing the VIX, and he went back to like 1992, and I'm going like, well, there was no VIX in 1992. No, and unless he now, it's possible he could have created the data if he had the data to do so. And the other thing is that prior to like 2003 or 4, 5, the predominant trade was not in the SPX; it was in the OEX. The OEX was the S&P 100. Back in the 90s, everybody traded the OEX, and nobody traded the SPX at the CBOE. Well, it was minute, and now nobody trades the OEX anymore. They all trade the SPX, and now we have these weekly expirations every day of the week, and that's a whole another incredible thing. I know it's been a long time, and you probably want to cut it short. You want to do another one of these?
I would love to do another one. I could talk to you forever. This has been amazing, and I would really love to get into your charts next time, because we didn't even tap the surface of what you do. But I've loved all of this background, and I have learned so much, just so much in this, and I would love a little chance to digest it, and then let's really get into some of your charts and your studies.
Totally possible. I mean, we can do that. So you just pick a time, and as long as I have the time. Weekends are good for me, because during the week I'm just like hyper busy. And
me too. But I usually have a nice weekend morning open. So all right. Well, Rich, thank you so much. This has been wonderful, and we'll definitely have you back for a follow-up episode. And this will come out right around Thanksgiving. So happy Thanksgiving to you and all my Penny Lane potties. I appreciate you guys. Thank you for listening and all your support of the podcast over the last 2 years. I am forever thankful and grateful.
And thank you for having me, and thank you for everybody that's going to listen to this. And everybody have a wonderful Thanksgiving and a prosperous rest of the year. I think it's going to be good for all of us, and I'll look forward to visiting with you again. And I'll look forward to seeing you come and visit me in my room and see what I do in there.
I can't wait.
All
right.
Great insight.
Thank you.
Thank you.
By accessing this podcast, you acknowledge that the Penny Lane podcast makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information, opinions, and recommendations presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. This podcast should not be considered professional or financial advice. Unless specifically stated otherwise, the Penny Lane podcast does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the Penny Lane podcast. The Penny Lane podcast assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials or on third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein.